Hello everybody, this is Toni Turner and welcome to the market now as of about 10:30 a.m. Eastern on Friday, June the 11th. Global growth worries and a sharp drop in oil prices sent jitters through Wall Street today, leading the three major U.S. indexes lower for the second straight day. Despite higher demand, oil prices fell on profit-taking after a three-day winning streak that started Monday and pushed prices to 2016 highs. Financial stocks came under pressure again today as global issues, including uncertainty over interest rate hikes and the impending vote on Britain's membership in the European Union, known as Brexit, sent investors to safe haven assets. The yield on government bonds fell globally, while gold prices held near a three-week high. Now let's go on to three charts that could give us some insight into the week to come. First of all, we're going to look at a daily chart of the S&P 500 Spider, the SPY. As you all know, this is the tracking stock or the ETF that closely follows our S&P 500 benchmark index. Now, when I captured this chart this morning, the SPY was trading at $210.54, which is about 2105 on the S&P 500 itself, just a little above that 2100 mark. So that's actually positive. As well, the SPY is trading above the red line, the 20-day moving average, the green line, the 50-day moving average, and certainly at a nice premium to the black line, the 200-day moving average on this chart. Now, we're looking at support here. It's like we can handle the good news. Can the S&P 500 come down? Maybe it has to pull back a little, and I think it would actually be healthy if it does. Can it pull down to this green line, the 50-day moving average, which often offers support? Can it pull down to that? That's coming in right now at $207.66. So if the SPY in the coming week moves down to that, and then has the ability to bounce again and move higher, just maybe, we can go over the high at 2132 on the S&P 500 or $213 and change on the SPY and continue higher and make new highs. That would be continuing this uptrend. What I really think we need here is a catalyst. I think we need some really good news out of somewhere that will help this market go higher. Fundamental news would be nice. Actually, we'll take anything, but if not, if that doesn't happen, then we have to watch the S&P 500 because we know that its movement affects a lot of the stocks in our portfolio. Again, we would like it to hold above this 50-day moving average at $207.66. Otherwise, if it has to come down to support here at $204, that's a caution zone for me. That's price support, but it's a caution zone if for some reason the SPY retraces all the way back down to 204 or 2040 on the S&P 500. Our next stop down would be a little over 200. We have the 200-day moving average right now coming in at $201.53. That 200-day moving average is also worth watching because a lot of institutional traders and investors watch this line and consider it to be a big negative, and actually so do I. If their stocks fall below or the S&P 500 falls below the 200-day moving average, then that infers that a lot of stocks in that major index are also doing the same thing. So let's keep an eye on the SPY as long as it can stay above, say, 205 or 207, and maybe it just maybe it trades in a range for part of June or all through the month of June and July. That would be fine. A move lower, however, will certainly get our attention. We'll have to get more cautious. Now let's look at the iShares Germany ETF. Europe is very much in the spotlight today and their negative interest rates. And since Germany is the leading country in the European Union, I believe this bears watching. I believe as eyes turn to the European Union, keeping an eye on the Germany ETF is probably a good idea, because should it for any reason fall lower, then I think it could influence our markets. Today when I captured this chart, it was trading below its major moving averages at $25.31. That's just above this caution line that I've put here at $25, which is kind of mild price support here. If the EWG, which again has major German companies in it, fell below 25 and moved down to 24, that would be another negative. And if it moved below, say, $24.25, right around there, or $24.50, then I'm sure that that could pressure global markets and certainly our markets. So you may want to keep an eye on the EWG in the coming week. Now let's go on to something a little more cheerful. Today we're looking at the PowerShares Food and Beverage ETF, the PBJ. Aptly given a symbol PBJ, huh? The Food and Beverage ETF contains 30 U.S. food and beverage companies like Kellogg, General Mills, PepsiCo, Yum Brands, Mondelez. I believe that the food industry is going to come more to the spotlight in coming months. And so also a lot of these companies are staples, not only in our pantry, but maybe in our portfolios. And they pay a dividend. They're mild-mannered. We have to buy food. It's a defensive play. So you may want to keep an eye on the PBJ. When I captured this chart today, it was trading at $33.02. It is not as overbought as most industry groups I've been looking at. It is trading slightly above its 200-day, its 50, and its 20-day moving average. So I'm going to keep an eye on the PBJ here. As long as it can stay above $32, you may want to watch it going into next week and see if it's something you want to look at as a potential investment. It is not a day trading ETF. It doesn't have the volume for that. So I want to keep an eye on it here again, especially if it stays above the 50-day line at 32.50 and can move higher from there. Again, it's something you may want to hold for the little longer term. And of course, that depends on what the market does. The MACD on this chart is trading right at its zero line and just a little above it. The RSI is trending higher. So keep an eye on the PBJ in the coming weeks. And now let's go on to next week's economic reports. But first, let me ask you a question. Becoming a trader who can pull down consistent results is the goal, right? And that's true for investors as well. So if that's what you want, please check out our big summer sale on my online training program, 7 Steps to Successful Trading. Together, Gordon Scott and I, in this online training, break down what you need to know to be successful in just 7 easy steps that anybody can follow. And when you master these 7 steps, you can add on to them later as you acquire more skills and techniques. For many traders, the essentials you will gain with this 7 Steps to Successful Trading training program are just about everything you may need to be successful in your own trading or investing. We're having a summer sale on 7 steps right now. We rarely ever put it on sale, so please go check it out. You can either go to the link that you see on this screen. So please check out 7 Steps to Successful Trading, our summer sale. I think you're going to be very, very glad you did. And now for the coming week's economic reports. Nothing much on Monday. On Tuesday, we have retail sales. On Wednesday, we have the Empire Manufacturing Index, PPI, which is the Producer Price Index, and crude inventories. as well as the all-important FOMC rate decision. Thursday, we have jobless claims, natural gas inventories, and the Philly Fed. And Friday, we have building permits and housing starts. Again, check out our incredible summer sale on my online training, 7 Steps to Successful Trading. Don't miss out on this money-saving offer because it's going to end very, very soon. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.